mastermind. I take things from life that we share together and kind of review them. These are little reminders and love winks that we have. And one of the things that we can review on this morning is we've gone over a lot of different philosophies in the last month or two. And when we make decisions or we have our Sunday night call, our Sunday or Saturday morning call, a lot of times we call it the tune-up, for us to go over things that we've seen, we've done. On a Sunday night, I like to do a check-in. And last night, yesterday I had someone call me and say, "Man, I have to go to court," and it kind of inspired this mindset call this morning, saying that is actually sometimes it's actually a good thing, for traders. For some it's a bad thing, but for good, it's sometimes to put ourselves into a courtroom. We have multiple things that we need to check in the morning. We have this pre-market routine. I call it the trading mindset. I have a briefing room, a devil's advocate. We talked about having a devil's advocate, someone to review and just challenge the things that you've thinking, and to check the readiness. Well, going to court, you're being judged, and that also is sometimes a good thing, to put yourself through a judgment. And it's even better to actually prepare for court, prepare your body, prepare your mind, saying that, trying to understand what is going to happen if it's a guilty or an innocent plea, right? And so that is a mindset that we can actually create a courtroom for our system every week for our body, our mind, and also saying that, what's the worst thing that can happen? And this is kind of a upgrade to have actually a operating system and operating process. Same way that we created a check the readiness, in the for your mind, review the decisions that we made. And that's one of the things that we talk about with journaling and with reviewing our trades. Sometimes we can put out a fire before it even gets there, right? There's smoke when you're in a house and it catches on fire. There's a lot of things you could have done before the fire even started, right? And that is getting prepared, and that's upgrading the system. There's certain things like the pre-decision investigator, which is going through a check the overall market. If you have to say, I'm going to investigate before I make a decision. After you have a win, right? The break down the autopsy. You review and says, hey, what was the cause of that win, right? And it's just a mindset that everything that we are experiencing in the market and how we respond and how we look at the trade after, it also helps us judge our progress. And so, when it talks about the verdict, after a decision, saying that, am I able to deal with the consequences? If I take a trade, am I able to deal with the ups and the downs? Do I have a sprinkler system that lets me know, hey, before, what is the sprinkler system? What is the smoke detector? What's the building code and insurance policy, on a building, right? If we don't install a sprinkler system, what does that mean? It means that if we do catch on fire, there's no protection there, right? Smoke detector allows us to see the smoke before it happens. We have to get the building inspected before we let tenants come in. Insurance policy is that in case something happened, how am I going to recover? And, after you build something or after you take a trade, what is your insurance policy? That's almost like if I take a long and a short on a market, right? That is, taking insurance on a trade that I'm going through. And so overall in trading, the money will take money, the market will take money from you, and that's the cost of even just getting in the game, right? No market, no drawdown, no mistrade can take your self-trust, right? Meaning that you will have to trust yourself to install certain systems, right? I need to entrust myself to install a sprinkler system, install a protection mechanism, right? And also to call in the right things that I need. And so that is the pre-decision that we make before we even start trading or before we make a big decision. I was going through the philosophy and I was saying that the things that we went through in the mindset, right? I wanted to just review the different philosophies that we've talked about, right? Emotional exits. That's one of the biggest obstacles that we have in trading is that we'll exit based on the emotions. And, right, we all plan to have a target, but the psychological, impact of trading, right, will have us calculating and anticipating, different moves in the market. And this is a lot of times our stop limit, our stop loss, right? Those are things that we identify before we even take the trade. Those are, putting in a stop either at my entry or putting in a stop 10%. That is part of the things we do before we even take the trade. And that's considered installing the pre-trade mirror, right? And this is, something that we identify, on the trigger, right? What do we put in to our trades before it even ordered? Before we enter the order, right? Some of us already have a stop loss procedure before we even take the trade. And, if we ask, if this goes against me, right, will I still be able to run my process? And will I take another trade? Right. And if that's the case, we've already established that we're going to take another trade even after our first loss. Right. And that is, installing a mirror and trying to look at the identity of what type of trader we're going to be. Some people have a two trade, maximum on a day. Some people have a stop loss on, the week, right? And others, they just go into the week with no plan at all, right? And so installing the pre-market checklist, right? And that's something that, I want to share here is that we actually had a pre-market checklist for people that's using the momentum gate or the market gate. I'm actually going to share it, and I'm going to share that inside this inside here, the scorecard. So I'm going to share a gate, which it helps with the pre-market, and this idea that no matter what type of trade that you have, you should have a mirror before the trade even starts. So this is the money mogul gate that I just shared, and this is identifying before you even make the decision on trading, what are the things that you're looking at, right? And this is something that every trader should have. No matter what style they trade, is you create a scorecard or a checklist, right? And this just happened to be a checklist on the money gate, right? Indicator that we use on the momentum. And it just talks about if I hop in a trade, what is the fresh catalyst? What is the market direction alignment? What is the sector strength? And, what it confirms. This is actually putting up a mirror before we even take the trade, knowing that here's the things that I'm looking for, right? I'm looking at the gate is above 6 or 7, so that means that it has, um, you know, met this criteria, or this is the criteria I'm looking for before it even starts, right? And right, written before entry, the trading plan. And so I know a lot of people, they do it in their mind, they do it in their head, uh, but pre-market, before the market starts, this is something that we can review. So right now, we looked at the market, and just out of the blue, we would have to do some. We would have to actually get the information, right, and go through a process before we even took a trade to actually identify, um, some of these, you know, scoring factors, right? The option flow, the risk reward, and the trader state, right? Is a plan written? Is a siding set? It's not a revenge, not a boredom, it's not a FOMO trade, right? And that is, so the indicator that we use when the market is open, we also can have a scorecard, um, to make sure that we're checking through these different catalysts to make sure that they're there. So I just share this inside the chat because this is kind of installing a pre-trade mirror before the trade even starts. All right. And so the Win Autopsy, this is, if we was in the courtroom, they bring in a autopsy. So there's a dead trade or even a winning trade. The concept is, film study, right? In sports, in elite sports, they always watch film, right? Of what someone does well, what they do bad, right? On your winning trades, it's like, looking at your win well in that trade, and also, um, what was in that trade that you identified. And for traders, you know, it is you should have sized up, or you knew, or you left half up on the table. And they say one of the most dangerous words in trading is should have, right? And it is, um, even though winning is unsafe, if you go back and say, oh man, I should have done this or I should have done that. A green trade is a winning trade, but the investigator and all of us, when we watch currently what we've done, we want to break it down, um, and understand, why we winning. Because if we don't understand why we win, or we don't understand why we made a decision, right? That is a win you cannot explain is a loss on layaway, right? It's going to happen again, and so that's not a good process, right? That could be considered a lucky trade. That could be considered um, rented luck. So if every green trade either has a confirmed edge or rented luck, right? The framework that you use was faulty, but you got paid anyway, right? And the Win Autopsy tells the story, right? They say rented luck, sends an invoice, and it arrives later on, maybe with more size, right? When you go in bigger, the confirm edge, right? Letting you know that you executed the framework. So the same thing, we went through the checklist and had that kind of completed, right? And had an idea before we entered the trade. That would be considered a confirmed edge, right? Luck would be after you've done the trade and after you won, you realize that, man, it had all these things that was on the checklist after the fact. And so the process is, more important, right, for identifying the edge than, the result after you took the trade, right? And it's just most traders only do autopsies on red days, right? And that means they're studying half the game film. Good traders, they review the good days and the bad days equally, right? Because they want to actually confirm that the edge that they've implemented is, producing the results. All right. And so this is, running a Win Autopsy, 4 questions, 3 minutes, right? Every green trade. It says, right, to implement it is what did I actually know and feel at the entry? That's a question that you go over when you had a winning trade. You want to actually know how you felt in the morning or how you felt before you took the trade, right? Feel at the entry. There's a lot of times we look at a trade and we'll see the chart and we'll see, what trade, what was the activity on the chart. Another question to ask is, how do we feel when we took the trade, right? And so right now I'm feeling like, oh man, I was looking at Walmart or looking at something defensive. It was over the line on a certain time frame. But it says, well, was I feeling confident, or was I feeling like, this shoots up to 120? It's like, well, when I entered the trade, I was kind of feeling a little bit, overall the market was, not super bullish green. It was just it was a trade in hindsight. So looking at your bias in hindsight, right? What did it actually feel in entry? What part of the edge did I capture cleanly? Right? Name and framework element that paid. The flow confirmation, the catalyst, the patience, right? This is what gets reinforced. So even on your winning trades, look at it and actually say, how did you feel? What edge did you capture? Right. And so, if I just took a trade like Walmart and said it was trending above, it had broke out the day before, it was trending above on a 23-minute on the trigger. But then I look at the 2 hour, it's still above or below the, I call it the money line, but it is breaking out of the water the day before. So it had a trend of bullishness coming out. And so on a defensive day, the inflow was 25% pre-market on a certain time frame, right? That's actually looking at a trade and identifying the questions of how did I feel or what was I looking at, right? And so this is what you do after you take the trade, but also you can do it before you take the trade, right? It says, what does this win confirm about my process? So it's breaking down the winning, I guess, judge, right, of what you do even when you won a trade. And then, make a clean self-trust ledger deposit, meaning that you can actually put deposits on, confirming why you trust yourself and why you trust your method, why you trust your decision making, right? And right, you capture your plan's profit, right, and the rest belong to a different plan that you were not trading, right? And so, you know, this will improve the trading, right? Because it says size grows where it should, right? When the wins are processed, this is one of the key things people ask me is like, well, how do you scale up, right? And it basically allows your brain to think that big trades are going to be safe when you know completely review trades that you've won and you've seen the process and you start to trust, when you're processing and you have self-trust that you've seen it and you've done this consistently, right? And it's the same review over and over again on the good trades and the bad trades. So, red days is criminals. Everybody feels like a genius on green days. But the consistency emerges when you review and have an autopsy on what were you thinking and what were you seeing on the days that you actually won as well. All right. And so this happens after repetitive, putting your trades and yourself through a courtroom. All right. And right, the report patrol is another philosophy that, you give yourself an honest report card, right? Meaning that you don't manufacture what was out there. And every closed trade is a completed patrol, right? And being honest that hey, I checked everything, I did the right things, right? I minimized the noise, right? It is the review doctrine, right? Is there a honest assessment, right, which protects the next trade, right? So when I go through a trade and says, yes, I did this correctly, I didn't just say, oh man, I just won a trade, and if you skipped over everything, it's better to address it because it will show up the next day that, hey, you skipped the entire process. So the review protocol, you run at the end of the day, every trade, win, loss, or miss entry, right? You ask yourself what was supposed to happen, right? Which entry zone, which invalidation, did I patrol the market the correct way, and what did I find, right? What actually happened on the trade that I identified the morning before? So like right now, I just said I looked at Walmart, and if I take the Walmart trade, and I said that, all right, my stop is at 112 because this is my is below the line. And then at the end of the day, I come back and look at it, and I says, all right, I expect to have resistance at 116, right? I expect it to stay above 112. It's defensive. It's coming out the water. I looked at the 1 day. I've seen the resistance up here. The highest was 119. The first was 116, and and I was going to exit if it drops back below 112, and I expected to test it and kind of have a range today. I didn't expect it to break out, and then at the end of the day, you go review it and you give the honest conflict, the honest review of what happened, right? And then it says, all right, gap analysis, the deviation information. It was was there a catalyst that I missed? Was there fear, greed, or boredom that entered in the trade? Right? It's not a crime, right, to be wrong. It is a crime to kind of lie about what you initially thought. And so, right, because you're trying to identify things you can repeat, and you're trying to train the brain to find, right, working machinery. And even if it went against you, it's like, all right, well, why did it go against me? And what report did I have? What initially did I think? And this is just, you want to stop repeating the same errors. So when you find it and you have an honest assessment, right, I can go in there and say, you know what, this is trending down on a day. And, I looked at it on a 23-minute time frame. It looked good on that time frame. But on the day, it was still trending down, and I missed that, right? And then that'll help you stop repeating the errors, right? And then it becomes a rule. Hey, you know what? After a period of time, it says, I'm not going to take a trade on a 23-minute. I want the trade to be above on the day trending up. I want it to be on a 23-minute, and then that creates a rule that I'm looking for trending trades on all time frames: the 23-minute, the 2-hour, and the 1 day. Right. And then it becomes a situation where it's like, all right, well, I'm establish that rule because I kept entering trades on a shorter time frame that was trending down, right? Even though they looked like they were bullish, right? Then you establish a honest protocol that I do better when the trade is trending up, right? And that is, what's happened is identity stays intact. You can actually identify things that overall, wasn't beneficial. All right. This just talks about the concept of strategic foolishness. It talks about Jeff Bezos and Steve Jobs. They had strategic foolishness, right? Leaving Wall Street to sell books on the internet, right? But eventually, he turned the book company into something even greater. And it just talks about sometimes the crazy ideas or the different methods. It modernizes the trades, modernizing life. Um, you know, it's talking you out of legacy and building, right? So the the agents that we use, the AI, right? it initially looks foolish, but then we build better tools. And so it's not foolishness, it's investigation, right? Investigating and using data to make adjustments. And right, having data, um, you know, is not being reckless when you can actually go back to your data. And so this is kind of how we identify certain time frames, right? It's like, all right, well, I'm gonna hold this trade until 9 o'clock, right? And it's based on data. It may look, you know, crazy initially that, all right, man, you're down in the trade, you're gonna hold it to 9, but it is based on data and defined risks and payoff. So a reckless decision that doesn't have, you know, undefined risks and a feeling is the opposite of mathematics. So if I can look at a set of trades of 20 trades and says, well, you know, normally if I hold them until 9:15, I normally see recovery 80% of the time, right? And so now that data becomes the deciding factor, right? Not the, well, I'm just holding it for a little bit longer. And so that is strategic foolishness, right? It's the boldness to hold the trade even when it's down, but you're waiting for a certain time based on your data. And this is another way that, you know, in a courtroom, it's like, well, yeah, you know, your feelings and emotions, but also what does the data say? And so you have to collect complete data. That means that even a trade that you took a loss on, you look at what time that you took a loss, right? You look at the data and then see how it would happen at the end of the day. That is a review process that I've identified what I'm thinking in the morning, pre-market, you know, while I was looking at it, you know, you document it. At the end of the day, you ask, you know, hey, was my thesis correct? The reason I'm going through this process is because we have people that paper trade and they paper trade and they're looking at the trades and they'll take the trades, but they're not collecting the data. So that is about putting your trades in the courtroom. That's probably the entire you know, gist of this mindset call is to review things that you've already done, right? To, you know, help you get more data so it's not a waste of time, right? And that is you know, identifying things that you're doing in trading and how is it benefiting you, right? What data are you taking from it? I'm going to share this document real quick because I was just going through it. And it also coming out here is, you know, once you get through the different protocols, it goes through a self-trust, right? It's an account that you build and you fund it, right? And it's a honest assessment of every deposit, you know, win or lose that you're making. So you're reviewing your wins, you're reviewing your losses, and that helps you determine, you know, when you're selling. So when someone asks me, do I have a target? And I tell them, well, I'm waiting until a certain time. Or if I'm taking a trade, you know, and I have a couple of weeks or 6 weeks in the contract, it is having that self-trust that I'm looking at the data saying that, hey, if I hold for 7 days, 21 days, you know, 90% of the time it's going to be higher, right? And that becomes a process that you own, and that becomes the ledger that you develop, right? And that is not the emotions or making, you know, rash decisions, right? And so if you track 4 weekly numbers, you know, every Friday, uh, right, clean verdicts, mirror questions, um, you know, you score the week, right, on deposits minus withdrawals, um, monthly correlation, right? Are you going to be able to put self-trust in your next month, right? And you need to do this over 6 to 12 months, right? Because over a period of time of 6 months, 12 months, it becomes a edge. And this is a part of trading that, you know, sometimes you're going to need time because you're going to have to need data. And so this is something that we are, you know, trying to help get guys in over a 12-month period. So you hear us talking about the 1,000 roadmap, right? The roadmap is going to come after, you know, 6 months, 12 months, because you're going to have to correlate and take data, right? And so your trading becomes a courtroom, and you don't want to miss taking this data and not seeing what you need to see, right? Because this is actually going to help your future, right? Being able to see clearly of what you're doing and what trades and what you're thinking during the trade. So the vision is infrastructure. And you basically, it's the bridge that's going to take you from not being successful to being very successful. It's having that data and being able to cross that bridge, right? And so you have to run the monthly audit, right? And that is a audit over the entire month. And the first Sunday of every month, which was, I do it every Sunday night, is I do a check-in. And I want to see if the vision is aligned and is a month going like I thought, right? It says nobody wakes up and decides to think small. And you skip the audit for 6 straight months, right? That's how you become small. That's how you stay small, is not doing a audit, right? You start training yourself to think small by not reviewing it. And this is how you scale up, is by running this, putting yourself through this courtroom, and you'll realize you have enough data to actually go bigger. All right. On that note, man, I want to give everybody the morning back, and I'll see you guys inside the chat. The business, they pay a lot of money for data, right? And here we have it, and we have it with multiple mastermind members. So over a period of time, we know that dark pool works. We know that, giving yourself more time, we've seen it by being in the mastermind. You want to collect that data, but the emotional data, you have to ask yourself honestly, what you're thinking and how you feeling. So that is the gist of the mindset, is that, we can put ourselves through our own courtroom and manage our winning trades, our declaration, manage our emotions, but we have to have an honest assessment. So on that note, I'll see you guys inside the chat. And you see my report is running right now. Actually, I'm gonna send this report out since we're on this call. This is the first report that runs for me. It just pops up at 6:05, and I will actually, let me share this right now with you guys. At least since I'm going a little bit longer, I'll give you guys this billions report. And this is the first report that I look at that has data right from this morning. Yeah, share this with you guys. All right. So we're here. Download this, review it. This is the current market right now. I like to go straight to the structural content and weekly setups. All right, Monday accumulation fades. Observe. Use Monday's open position for the week. It's just a reminder of what's happening. All right. I'm not sure. Nvidia is up pre-market. That don't look right. This is Nvidia. All right. Yeah, so it dropped. Yeah, it's from 206 to 208, but it's not up that much. Structural context. It's going over. It's just, yeah, I'm actually gonna review this. And this is a catalyst right here that happened overnight. So you have Netflix earnings Wednesday. You have it looks like accumulation, pre-market. You got the financials that's stable. So the financial sector right now, pre-market, is probably moving. You got stable. Yeah, I had to look at after review this. It may be outdated. All right. On that note, I'm gonna see you guys inside the chat.